Sakegesprek met Theo Vorster in samewerking met PPS Investments.
It's a privilege to speak to an international fund manager, specifically if that person has South African roots. I'm talking to Dawid Justus from the Capital Group.
Thank you, Theo. I really appreciate the opportunity and it's nice to be here.
Dawid, if you look at the world and you look at financial markets, the economies, the political environment, what are the major themes that you're currently seeing?
Well, Theo, I think the first one has to mention is the great debate about how persistent inflation will be in developed economies and how much central banks will have to raise interest rates to counteract the inflation and bring it under control. Initially, the fixed income markets were more worried about this, but as we've seen over the last few months, weeks, and especially the recent days, the equity markets and the fixed income markets are moving around a lot on as new information becomes available, which indicate that the rates may have to go up more or that they might be able to be cut soon. I mean, there's a great debate around this. And I think in South Africa, we've known inflation better, but in many of the international developed markets, it's a relatively new phenomenon for many people. And so there's a lot of discussion about that. Another theme is around China's reopening and how that will develop. The key domestic uncertainty in China now that COVID is pretty much behind them as well is around the real estate market recovery and how much property development will recover. The government is ensuring that projects are getting completed, but new projects are at much lower levels than pre-COVID. And the financing of those projects are more in question, and there's significant implications for global commodity demand as a result of the weakness in the Chinese property market, and so that's a major theme of discussion in the world of investing. There's also ongoing uncertainty around the economic cycle in the US and Europe. Been much more resilient over the last 6 months than the market feared. It's partly the result of a mild winter, but also fast adjustments from both households and enterprises in terms of energy demand. But fears still remain around energy inventories for the Northern Hemisphere winter, which will come at the end of this year. And there's also still worries about the impact of monetary tightening in economies. Normally, inverted yield curves precede recessions by 12 to 15 months, and we've had an inverted yield curve in the US since the middle of last year. And so many expect that there will be a recession in the US, but recessions are notoriously difficult to predict, and we'll have to see what happens, but that's an ongoing debate as well. And then the last one I would mention is the realignment of the global manufacturing base and manufacturing capacity. More and more countries and companies want to be less dependent on China as a supply base. That's resulted in a term called China Plus One, where companies or countries want to have an alternative supply base to China. Countries like India and Mexico are benefiting from that. Actually, India is becoming a very popular investment destination, partly as a result of this. And so I would say those are some of the major themes in the market at the moment.
Very interesting, Dawid. If you look at the markets currently, and I want to talk about the risks and the opportunities. Let's start with the risks. What do you see as the biggest risks?
Well, I think the biggest risk is that valuation remain high by historical standards, especially if we take into account that corporate profitability also is quite high. If you look at what the proportion is of corporate profits to GDP, it's near historical peaks. And there's still legitimate fears about recessions, as I mentioned earlier. And so from that perspective, valuation has to be a concern and a risk. I would also say the relationship between China and the US and increasingly China and Western Europe as well continue to be a risk. It's clearly a strained relationship that may deteriorate further. The world economy has integrated to a great deal over the last 30 years as outsourcing to China happened. And it could be very disruptive if that was forced to be changed on short notice because of political developments. It would mean more inefficiencies in the system, redundant capacity would be needed. For example, Taiwan Semiconductor Manufacturing Company, the biggest a producer of semiconductors in the world, are now developing facilities in Arizona and in Germany and in Japan. All of these facilities are significantly higher cost than what it would be in Taiwan. And so that could lead to further inflation as well. So there's a risk associated with that, and a lot of these factors are interlinked. And then the last one that I would mention is the war in Ukraine. There's always a risk that could escalate further. Most informed observers think that the risk of tactical nuclear weapons being used is quite low. But most of them also thought that Russia would not invade Ukraine a year ago. And so that risk cannot be ignored, and obviously the impact could be very significant.
That's the risk side. On the other side of the coin, Dawid, the opportunities, where do you see opportunities?
Well, fortunately, there's so many opportunities in the world still. As usual, innovation continues to drive new products and services around the world. Technological developments is enabling a lot of innovation in a number of areas. One that I would mention is healthcare, biotech, and pharma, but also service delivery is seeing very significant innovation with lots of opportunities that come alongside them. One specific example are the GLP-1 drugs, which was originally developed to counter diabetes, but they seem to provide reliable weight loss. And in the US, we've now had a product approved for weight loss, Wegovy from Novo Nordisk, and another one from Eli Lilly as well. They completely sold out. And even the drugs that was originally focused on diabetes remain in short supply around the world as people start using them for weight loss purposes. And this is an area where it's difficult to scale up the production. Eli Lilly and Novo Nordisk are both spending billions of dollars to increase capacity, but it seems that it will be quite a while before supply will meet demand. Another opportunity is around energy transition, which will continue to create opportunities, whether it's in solar or wind or other cleaner energy sources. The key area here is around low-cost energy storage. And although the cost of batteries are coming down, if we can get real quantum breakthroughs in terms of energy storage, that will create tremendous value around the world. China is well positioned to benefit from this. They're a leader in a number of areas. But the Inflation Reduction Act in the US and the EU subsidies for cleaner energies is also creating a lot of opportunities for companies. The semiconductor space continues to provide very attractive investment opportunities. Artificial intelligence, machine learning, consumer electronics, semiconductor contents in vehicles, production equipment, automation, and the wider Internet of Things are all require more semiconductors. And the supply chain for semiconductors have consolidated over the last couple of decades. The industry has become less cyclical and more profitable, and we see quite a few opportunities in that area. Another area is around this resurgence of the Chinese consumer, where there's a lot of savings, especially amongst higher income Chinese consumers. And there's some pent-up demand that will be spent on traveling and luxury goods. And so luxury goods and tourism are providing opportunities. Commodity producers might also provide good opportunities. ESG concerns and market-imposed capital discipline have constrained investments in a lot of the commodity areas. For example, if we look at copper, it looks as if there's going to be significant shortages in the second half of this decade, and they will worsen further in the 2030s. At a time when the shift to electronic vehicles and sustainable energy will pick up speed. And so copper supplies may be interesting, but also other commodity suppliers as well. And then I mentioned India and Mexico before as countries benefiting from China Plus One and the global political developments.
Dawid, thank you. I cannot leave this interview without asking you about South Africa. You're an international equity fund manager in London. If you look at South Africa, what's the current sentiment?
Well, sadly, Theo, I have to say there's more limited talk about investing in South Africa today. It's in stark contrast to 10 to 15 years ago, when there was not only a lot of excitement about South Africa, but also about the continent of Africa in general, and unfortunately, both of those areas are not getting much attention from investors here at the moment. The ongoing challenges around electricity supply continue to hurt confidence and the prospects for economic growth in South Africa. And some market participants here are openly talking about the deindustrialization of South Africa now. The political challenges around enacting much needed political reforms, structural reforms, and the ongoing brain drain is also getting attention here. But having said that, there are opportunities in South Africa, and there's so many low-hanging fruit in South Africa. The latent potential of South Africans are incredible. South Africans so often exceed expectations when they get opportunities. I mean, there's a number of South African companies that have clearly shown that over the last couple of decades and created tremendous value for their shareholders, such as Naspers and Capitec and Shoprite and Bidcorp, and a number of others. And I remain convinced that South Africa has the potential to really grow faster if the right policies can be put in place. There's institutions such as the Reserve Bank and the Treasury continue to be shining stars and create a lot of hope that South Africa can find the policy decisions to help unlock further growth. And hopefully that will be the case, and we'll see South Africa reach more of its potential in years to come.
Dawid, on that positive note, thank you very much. It was a privilege and an honor to speak to you.
Thank you, Theo. I really appreciate the opportunity.
Until next time, good day.
Sakegesprek met Theo Vorster in samewerking met PPS Investments.